Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 5th, 2025, and we're diving into Domo's recently released earnings report for their fiscal third quarter of 2026. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Domo, a leader in AI and data products, has just announced their Q3 results, and there's a lot to unpack, from revenue figures to strategic insights.
Revenue and profitability overview. Let's start with the top line. Domo reported a total revenue of $79.4 million for the third quarter. How does this compare to their subscription revenue, and what does it tell us about their business model?
Great question. Subscription revenue, which is a key indicator of Domo's recurring income, was $71.9 million. This highlights the company's strong focus on building a sustainable revenue stream through subscriptions. Additionally, they reported a net cash inflow from operations of $3.4 million, which is a significant improvement, indicating better cash management and operational efficiency.
And what about profitability?
On a non-GAAP basis, Domo achieved a net income of $0.3 million. This is a positive sign, showing that their cost management strategies are paying off, despite a GAAP net loss of $10.4 million.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 41 cents for Domo, based on a survey of 2 analysts. How did the actual results compare?
Domo reported an adjusted EPS of 1 cent, which is a significant beat against the forecasted 41 cents. This indicates that Domo has managed to control costs and improve margins more effectively than analysts had anticipated.
What does this mean for investor sentiment?
This EPS beat is likely to boost investor confidence, as it suggests that Domo is on a path to profitability and is managing its financials better than expected.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Domo reported a non-GAAP operating margin of 7%. How does this compare to their GAAP margin?
The GAAP operating margin was negative at 9%, but the non-GAAP margin of 7% shows a positive trend. This improvement is largely due to cost-cutting measures and operational efficiencies. The adjusted free cash flow of $2.1 million further underscores their ability to generate cash from operations.
And what did the CEO have to say about the future?
Josh James, Domo's CEO, expressed optimism, highlighting their ecosystem strategy and expectations for positive free cash flow throughout the year. He also mentioned the fastest billings growth in over 3 years, which bodes well for future revenue.
Key takeaways. To wrap up, Domo's Q3 results show a company on the rise, with strong revenue figures, an EPS beat, and positive cash flow. John, any final thoughts on Domo's investment prospects?
Domo's focus on subscription revenue and operational efficiencies is paying off. With a positive outlook from the CEO and strong billings growth, they are well-positioned for sustainable growth. Investors should keep an eye on their ability to maintain this trajectory.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Domo's performance in the comments below.